This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil, and we're going to talk about multiple time frame trading today and giving you an understanding of how sometimes you have to make some adjustments when a stock is pulling back in an orderly way. An orderly pullback sometimes are the hardest stocks to get in from a trigger standpoint. All right, so I want to go into this and explain what to do, how to make some adjustments. All right, before we do that, now, if you want to learn more about some of the techniques that I'm using to find these patterns, you can go to my book, or you can click the link in the description and you can find out more about the book. Also, if you do enjoy this content, please hit the like button and also subscribe. All right, so I've got the grid of VLO, Valero, up right now with a monthly chart in the bottom left, weekly in the bottom right, daily in the upper right, and hourly in the upper left. All right, now I want to kind of explain here how this pullback, we had a strong move to the upside and we got this pullback. All right, this pullback was really attractive in multiple ways. All right, it had, and it was orderly. All right, let me just go through some of the things we'd be looking at this point. We broke the downtrend line. Clearly broke the downtrend line, which is the 1 and a 1, 2, 3 change in trend. All right. Now, the other thing that happened during that was we were forming the 2 on the pullback. All right. So you could sort of build a case and say, okay, first thing is this is the 2 of a 1, 2, 3, right? 1, 2, 3, you fill that in. All right. Now, it's a orderly pullback, meaning that it's closing above the open each bar. All right, so that's why we're getting red bars. We're closing here, opening here, and that's happening on every single bar. Why is that important? And we had 4 bars in a row where that happened. Why is that important? What that's telling me is that we're not creating a lot of resistance along the way, meaning if we go back to the upside on the smaller time frame, it's not like we're going to see a whole bunch of resistance in place. It's basically forming one of these patterns where you move down. You're orderly. So on the way back up, you're not going to have that much resistance. All right, very important key. What I talk about in my swing trading course is a 3 to 5 bar pullback. We want a 3 to 5 bar pullback, and preferably we want the pullback to have consecutive red bars. All right, we'd love to see. One of the more attractive features is this 3 bars in a row, or 3 green bars. Notice what I'm looking for though. I'm looking for a pullback to an 18 that's rising, or a rally to an 18 that's falling with 40 support. All right, with 40 support. If you have that, you got the pinch play. I'm showing you 2 exact patterns that are going the opposite direction that basically played out in a similar way. This one didn't have the DI confirmation, but you had it kind of everything else there. So we get this 3 bar pullback. All right, so we can start building the case. As I said, it's the 2 and a 1, 2, 3 change in trend. It's pulling back to the 18 MA. That's a second. All right, it's a 3 to 5 bar pullback. That's 3 red bars, right? And then we've got a narrow range bar. So this little bar right here is a narrow range bar. All right, so that's 4. All right, we started to build this case. If you can get at least 4, 3 to 4, you've got a pretty good trade on your hands, most likely. All right, number 5, it's a pinch play. All right, number 6, green DI is crossing and holding over red for the first time in quite some time. You can go back a little while. This is the first time this has happened in on the chart in a while. Certainly through this entire down phase, we did not have that take place. All right, so we're building up this case, and it's an orderly pullback. And as I described, it doesn't create a lot of intermittent resistance along the way when you turn back to the upside. All right, that's incredibly important when you're looking for a trigger. Now, I did want to point out one thing. When we pulled back here on the monthly chart, we were actually forming a 0 line reversal. So we had a 0 line reversal on this time frame and a pinch play on this time frame. Really good. It's sort of an attractive little combo to have. All right. Now, we get the 3 to 5 bar pullback. Now we want to go get our trigger, right? We want to look for a trigger. Well, let's look at what happens when we have something that's incredibly orderly. We go down, we just pull back, we don't do anything outrageous on the way down. We're not forming any kind of like a clear level to get back through. It's just kind of just working its way lower, all right? But it's lower enough where we're crossing the zero line. And in most cases, I'm saying, look, if we're below the zero line, then we're going to wait for a second signal. So one signal crossing here is not good enough. We got to wait for a second. Well, what happened? We never got a second. It just took off. All right. So we have to take into account that the higher time frame is the time frame we're trying to get in. All right. We have to recognize that this time frame is only trying to help us enter the trade. All right. Once we understand that, and we understand the conditions that are in place, when we get a very orderly pullback here, sometimes we only look for the setup of the trigger. All right. Once the trigger has set up, and what is the setup for the trigger? What I back tested all these years ago is if the 18 crosses down below the 40 and price closes below both, we have what I call a setup for the trigger. All right. And then what we did the back test one was as soon as it closed above the 40, then we had a trigger. All right. So I'm not telling you to necessarily wait for that as a trigger, because again, what we're trying to do here is look at the fact that this is an orderly pullback, and orderly pullbacks with low volatility are actually going to get a better trigger off the higher time frame than they will off the lower time frame. When you don't have any volatility, it doesn't show up in the form of a reversal on the lower time frame. So the best way to handle this is to actually go down one more time frame, but we have to have a few conditions in place first. First, we have to have a setup, and we do have a setup. We close below the 18, which is below the 40. Once we have that on a single bar, we can say that we can now do some other things. We look for other things. One thing we want to look at is we know we're below the zero line, but we want to make sure there's not significant selling here. And we had a strong green move to the upside. This green, this blue move, the 80x move, is based on the buyers, based on green. All right. And then if you look at this rally, it only got to the 25 mark, maybe 26, and that was based on the sellers. So to me, this is a weak enough decline that the buyers are still in command. And so I can now look at the lower time frame to see if there's a reversal taking place. All right. We get a full-fledged reversal, break the downtrend, we reverse, we get these moving averages rising, and we get these pullbacks going to the upside. All right, it's a clear reversal on this time frame, and we can play that as a reversal pattern. Once we get the 1, 2, 3 completed, we can play this in conjunction with the fact that there's not a lot of selling on this time frame. All right, and we have all of these conditions in place on the actual trend time frame or setup time frame. Once we have all that, then we can go ahead and work down 2 time frames if we want. Now, this is the type of situation where you might just miss this trade. And if you are missing this trade, I'm at least explaining why. All right. If you get a real orderly play, there's nothing wrong with playing it on just this one time frame. You can just play it off of this time frame, use a 2 time frame ATR, that time frame's ATR, play it on a single time frame, and what I would suggest to you is play it as if you're on the daily chart and take every target. That's not a bad way to play that as a hybrid trade if it plays out that way. All right, we've got this orderly setup. It's not really a monthly, weekly trade. It's more of a weekly, daily, but you could play it as a hybrid, use the higher time frame ATR, and then just take a target at every time you hit one. So that's how I would look at this. There's a lot of different ways to handle these types of trades, and I want to make sure you understand when you're getting these orderly pullbacks, this might frustrate you, but I want to make sure you understand you can always go down one more time frame. As long as the ADX isn't showing a lot of strength in the sellers on the way down, you can always go down one more time frame to get yourself in. All right. And you can always use a close above the 40. Once you have that setup bar, you can always use the close above the 40 as a trigger as well. All right. I hope this helps. Let me know if you have any questions. Thanks.